If you're a business owner, content creator, or entrepreneur that nets over $50,000 a year and you're not using the S corporation, you could be losing thousands of dollars in taxes. Today, I want to spend some time with my spreadsheet, show you the math, when it makes sense to be an S corporation, when it doesn't make sense to be an S corporation, and potentially you can talk with your CPA and tax professional to see if you can implement this for your business. So let's go ahead and get right to this. I built this FICA tax calculation for married filing jointly. So I have two calculations here, one for married and the other one is not. For today's purposes, I am just going to assume you are married filing jointly. It's going to be about the same for single, but there's a little bit of a difference if you make a lot of money. But anyways, let's stick with the married filing jointly today. And today I want to make an example where there is a business owner that is netting about $50,000 right here. So if you are a sole proprietor and you are not an S corporation, by default, you are a sole prop. You file taxes on what's called Schedule C. So if you were to just file your Schedule C with $50,000 of net income, again, that's after all your expenses, you can expect to pay approximately $6,200 in Social Security and about $1,500 in Medicare taxes. So the total tax there is about let's call it $7,700 just for self-employment taxes, guys. This is not even including federal or state. This is just self-employment, right? So, okay, well, what happens if you decide to be an S corporation? So over here, let's do about $25,000, okay? So what I'm doing here is that I'm adding what's called a reasonable salary. So this is the most hottest and debated topic in the tax world. What is considered reasonable? I like to take a reasonable salary as a percentage of my net income. So I like to use this matrix here that as you start to make more money, you take a reasonable salary that has a lower percentage relative to your net income. So for example, over here, if you are earning around $100,000, you can see the 100K right there, your reasonable salary should probably be somewhere around 40 to 50%. In the case of the $50,000 in net income, we should probably take a reasonable salary about half of that. So that's why I'm going with the $25,000 of W-2. So let's do the math. $25,000 of W-2, so you have to pay yourself through payroll. That would be 31. That would be 725. The total amount of self-employment taxes would essentially be cut in half. Now, here is something that most people don't explain. You need to file what's called an S corporation return, the 1120S. A lot of those tax gurus on TikTok don't mention this part. They just say, do it. But there is an expense to the S Corp, right? So that's what I want to talk about and make you guys aware that there are expenses. You're required to keep a clean balance sheet. You're required to keep a clean P&L. You're required to run payroll. There's all these expenses associated with this. So you have to make sure that the ROI is there, okay? So with the S Corp return, we assume the tax return is around $1,500. You have to have QuickBooks. If you don't have QuickBooks already, get QuickBooks. You're gonna need QuickBooks because you're gonna need a P&L and you're gonna need a balance sheet when you file your tax returns. You're going to need to run payroll. It's about $300 a year. You could probably get something cheaper. I just use QuickBooks Payroll. There's Gusto out there. There's a lot of other payroll providers. I assume it's around $300. So all in all, between QuickBooks and payroll, it's about $800 a year. So total admin expenses are about $2,300. So the savings right here is 38 minus the $2,300. The total savings is about $1,500 a year. So that's where you can see it starts to make sense once you're netting about $50,000. The ROI is there. Okay, so here's another example where we have a business owner earning about $100,000 in net income. So we enter the 100,000 there, which I already entered. And then we're going to take approximately $40,000 as a reasonable salary. So use this matrix as a good guide. So we are netting around $100,000. Let's go up there. So that's about 40% as a reasonable salary. So that's 40,000. The rest goes as a K1 distribution or as an owner's draw, right? And that is not subject to FICA taxes, remember. So let's do the calculation. So $40,000 a reasonable salary. We have about $5,000 in Social Security and about a little over $1,000 in Medicare. So you can see total payroll taxes around $6,100, which amounts to about $9,000 total relative to just the Schedule C. But then we have some expenses for the S-Corp, right? We have the S-Corp return. We need to pay for QuickBooks. We need to pay for payroll. Maybe there's some other admin items that I'm not including there. Feel free to add in the comments if I'm missing something. You know, give or take, it's about $2,000 to $3,000 in expenses. You can see the total savings there is still very positive, right? So just to summarize everything here, the S Corporation is a great strategy for those business owners that are netting anywhere between $50,000 or more. Obviously, the more money you make, the better those numbers look. And once you get into the hundreds and the 200s and the 300s, it obviously starts to scale a lot better. So I'll leave the Excel spreadsheet in the link below. Feel free to use it and download it. And if you have other questions, feel free to reach out. Take care.